Today, we're going to dive into some key financial considerations when you head into the end of this year, currently 2023, and looking forward to 2024. Hey, I'm Evan. I'm a certified financial planner and the host of the Canadian Money Roadmap podcast. And every single day, I work with Canadians just like you to help you make better decisions with your money. So let's get into item number one as it relates to the TFSA, the tax-free savings account. The new room for 2024 has officially been announced as $7,000, which is an increase from $6,500 here in 2023. If you haven't already taken advantage of your room from years past, don't worry because you can use it in a year going forward. It's not a situation where if you don't use it, you lose it. You can always carry forward unused room into the future. Number two, something that you might want to think about going into the end of a calendar year. When you make a withdrawal from a TFSA, you can get that contribution room back in the following calendar year. So if you ever want to make a withdrawal, perhaps in the early part of a year, maybe let's think ahead a little bit and make a withdrawal now at the end of the year. So if you have the capacity to make that contribution again, you can do it right away as soon as the calendar year rolls over. Item number three is the First Home Savings Account. If you haven't opened one yet, it might be something to take a look at because your contribution room with the FHSA only carries forward if you have the account open. You don't actually have to fund the plan first to get the carry forward room. You just have to have it open. So if you're even thinking about buying a house in the next few years, just head over to your financial institution, your bank, your financial advisor, whoever, they can help you out with opening it up. And even if you don't have the money to do it yet, at least you have more options going forward next year. Item number five, if you're an investor in a non-registered account, take a look at perhaps tax loss selling or tax loss harvesting. This is the idea where you only pay tax in a non-registered account when you make money. And one of the ways that you can make money is with capital gains, but sometimes we're not so lucky and we have a capital loss. If you sell something at a capital loss, you can use that loss in future years to offset capital gains. But kind of a weird thing you can also do is go back up to 3 years and refile your taxes to claim any capital gains you would have had there against these new capital losses that you had. And you could get a little bit of a refund of the taxes that you would have paid in that previous year. There's lots of considerations when it comes to tax loss harvesting and tax loss selling. So make sure that you work with an accountant or a financial professional to make sure that this is done correctly and you don't actually get yourself in more tax trouble by doing so. Number six, things that you should consider before the end of the year is that if you're invested in mutual funds or ETFs, you're probably going to see year-end distributions coming out of these plans. So if you're in a non-registered account, so that's not an RSP, not a TFSA, those are registered plans where there's some tax sheltering available. If you're in a non-registered account and you receive a distribution, even if it is reinvested back into the fund, you will still pay tax on that, even though the money didn't hit your bank account. If you have questions about this, make sure you contact your brokerage or the fund company. You can get some details about that. Usually around this time of year is when some estimates come out for how much you should expect for distributions at the end of the year. Number seven, don't forget about charitable donations. If you want to get a tax credit for making a charitable gift, you have to do that before the end of the calendar year. You cannot backdate any charitable gifts to previous years, but you can actually carry them forward so that you could claim a tax credit perhaps in a year that might be more advantageous to you. Lastly, the things that you might want to consider before year end is taking a look at your workplace benefits. You might have some health spending accounts or some things that you haven't used up. In some employers, you might have vacation time that needs to get used up by the end of the year. Some people forget and they just leave money on the table for this kind of thing. So have a look and see what's available for you and if there's something that you might want to take advantage of before the end of the year. Thanks so much for checking this out. The quick version here was interesting to you. Perhaps you want to check out my podcast, The Canadian Money Roadmap, on Spotify or Apple Podcasts, wherever you listen to podcasts, and you can listen to the full episode there. Thanks so much, and we'll see you on the next one.